If you want to learn about the share market, be patient for a while. Stay with me and we will learn everything step by step. So let's get started with the share market.
Share market is a place where companies and investors come together. But what exactly is the share market? How does it work? And how can an ordinary person participate in it? In this video, we will understand everything in very simple language. First, let's understand what the share market is. The share market is an organized marketplace where investors can buy and sell shares of listed companies. When you buy a share of a company, you become a very small part owner of that company. A share simply represents a small unit of ownership in a company. Imagine a company divided into many small ownership units. Each unit represents a share. Companies need money to grow their businesses. They may need capital to build factories, launch new products, improve technology, hire employees, or expand into new markets. One way companies can raise capital is by issuing shares. When a company offers shares to the public for the first time, it is called an IPO or initial public offering. Through an IPO, eligible investor can get an opportunity to buy share of the company. So, how can an ordinary person participate in the share market? Today, investor can use a registered stockbroker and a trading account to place buy and sell order. A demat account is used to hold share electronically. You can think of a demat account as a digital locker for your securities. Just as money can be held electronically in a bank account, share can be held electronically in a demat account. When an investor wants to buy a share, they place a buy order through their broker's platform. The order is sent into the market, and when a suitable matching sell order is available, the transactions can be executed. In the share market, every completed trade involves a buyer and a seller. One investor wants to buy a share while another investor wants to sell it. The market system helps match this order. Share prices are influenced by demand and supply. If more investor wants to buy a particular share than sell it, the price may rise. Strong company performance and positive expectation can also influence investor demand. On the other hand, if more investor wants to sell a share than buy it, its price may fall. Company result, economic conditions, interest rates, industry trends, news, and investor expectations can all influence share prices. Investor may earn return from the share market mainly in two ways. First, through capital gains if the value of a share increases. Second, some companies may distribute dividends to their shareholders. However, returns are never guaranteed. Just a investor can make profits. They can also lose money. If you buy a share at a higher prices and its market value later falls, the value of your investment can decrease. That is why the share market should never be considered a risk-free source of income. One approach to the share market is long-term investing. Investor may choose to study businesses and hold investments for a longer period while focusing on long term growth. However, every investment decision should be based on research and an understanding of risks. Trading and investing are not the same thing. Trading generally focused more on short term price movements, while investing usually focused on long term ownership and business growth. Both involve risks, and knowledge is extremely important. India's stock market ecosystem includes stock exchange, brokers, regulators, depositories, and millions of investors. Stock exchange provide organized platform where eligible securities can be traded. Before investing, an investor should try to understand the company's business, financial performances, debit, industry, valuation, and future prospects. Following social media tips or investing simply because someone recommended a stock can be risky. So, in simple words, the share market is a marketplace where investors can buy and sell share of companies. Buying a share can represent a small ownership interest in a company. Companies can raise capital, investor can seek returns, but there is always a risk involved. Therefore, knowledge, research, patience, and understandings of risk are very important before making investment decisions. Understanding the share market is not something you learn in one day. The more you learn, the better prepared you can to make informed financial decisions. If you found this video useful, like the video, share it with others, and subscribe to the channel for more educational content.